Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. A very interesting turnaround for the Australian dollar over the last 24 hours. And it would seem that the momentum to the bearish case is increasing after the prices plummeted from 73.53 high to a low overnight of 72.39. The Australian dollar has given back this month's gains as concerns heightened over the future of the Australian Prime Minister Malcolm Turnbull as he struggles to secure his seat. The recent reaction against the Australian Prime Minister now weighs heavily on the Australian dollar as the Turnbull leadership hangs to uncertainty. It is viewed from my recent calls that target of 72.70 was the initial target from the rejection of the 73 region. With that level being crushed overnight, now looks towards 71.95 to 72.15. Do take note that beneath there I see little support until 69 cents if we take out 71.95. So do keep that in mind. But overall, the market is bearish. So I do expect to see further weakness with a cap intraday at 72.65 minor and firmer above at 73.25. Well, it would seem that the market is backed away further overnight from that 116.35.55 level after a brief look there now shows some concerns that the market has broken down further. This in turn could catch the euro dollar bulls off guard if the market plummets further towards the region of 114.85, as beneath there could see further scope to the recent target that I held at 112.85, where this hammer emerged not so long ago. Overnight, the European Central Bank ECB remains upbeat on the economy, along with new comments coming out from the Federal Reserve will keep the market on its toes, with Fed Jerome Powell expected to speak this evening from Jackson Hole, Wyoming. The recent comments have confirmed this week that the Fed is looking for a tightening in September, along with one penciled in at the moment in December. Also, the world's two largest economies, US and China, remain locked in escalating trade wars after the United States imposed 25% tariffs on an additional 16 billion of Chinese goods overnight, prompting China to no doubt counterstrike with a similar response against the US. So we keep an eye on there. But nevertheless, as I mentioned, the market seems to have found its bearish tone again. So I do expect to see weakness to continue. And talking of bullish tones, the fact is that dollar yen at this stage staged quite a surprising rally as it now breaks just above the MACD zero line. This in turns would see 111.55.65 break to rally on to 112.50.60 as a potential target. Intraday support at this stage seen at 110.95. Overnight, there was some news that the Britain has outlined plans for managing the fallout in the unlikely event of a no-deal Brexit, warning that businesses face more custom red tape and consumer risk higher card payment charges. In his first major speech since taking over as Brexit Secretary, Dominic Raab said that Britain would adapt a series of EU rules to allow its imports in and urges Brussels to do the same for Britain's goods. The guidance includes instructions for businesses who could face extra paperwork at borders and contingency plans to avoid medical shortages. However, Mr. Raby insisted he still confident of reaching an agreement with the EU ahead of the UK's planned departure in March 2019. So what does that mean for the pound? Well, as you can see, we are backing clearly away from this level 129, with the resistance now seen at 128.65 today, could see further risk to the downside. Now, a break of 127.45 would give us further weakness to that recent level, a clear bullish of 126.60, like previously rebound. Now, a break there will give us a move towards 122 to 124. Very disappointing that the doji that came in at 1,200 has continued on to the bear case, and therefore sees gold fall in further. If we move sub 80, we haven't broken there yet, and the market is staging a slight rebound this morning. A move above 87 could see scope back to 94 or even up to 98. Now, a break above there is the bull case, and I expect to see further rises towards 1,220. With that all being said, sub 80 negates this, and we could go back to the low seen around 1260. Well, after the bulls came from far and beyond the level of $66, now the market is questioning whether it can continue. Resistance seen at this stage is 68, 50, 70, and we would need to see further bullish momentum today. Otherwise, we could be looking back towards the support at 67.10. A break beneath there would give further scope down to 66 and maybe even reinstating the target of $62 a barrel, which I'm not giving up as of yet. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day and the great start to the new weekend.